This tutorial explains the analytics for the Assidium liquidity output. Liquidity deals with how fast you can trade out of your portfolio. In a volatile market, this can sometimes be tricky and therefore expensive, so this is an important risk element. Assidium looks back over the period that you selected in the setup screens and averages the trade volume data for each share for each trading day. Then it calculates in the percentage of that volume that you believe you can trade per day. You set that here within the output screen. Then the number of shares you hold are divided by that factor. This procedure is performed on merged holdings, which means that any derivatives are collapsed down into their delta-adjusted exposure in the underlying holding. These buttons allow you to change your assumptions about how much of the daily traded volumes of each share you believe that you or your broker can participate in. This obviously has a direct effect on the number of days or hours it will take to close your position. If the average daily trade volume of Tesco is 1 million shares per day, then these buttons allow you to calculate liquidity, assuming that you will be able to trade anything from 50,000 to 1 million of those shares yourself. You can see the effect of those different settings in the resultant liquidity overview. It takes either just 1 day to close this book, or, if I change my assumptions down to a 5% market saturation, to between 10 and 50 days. Toggle the buttons at the top to choose between the liquidity overview and the detailed security data, which shows you the actual volumes that were traded for every share as reported by your data supplier, and the resultant average volume over the period that you selected in the setup screen. The liquidity overview shows you the percentage of your portfolio that you would be able to trade out of in half a day, 1 day, in a week, etc. The percentages are discrete, not cumulative. Here, at the bottom, you can see holdings for which there is no volume data at all. This would be the case for any OTC Smiley securities that you created yourself, and may be true for other listed securities as well. For example, if the share has been suspended or if there is no volume data available from your chosen data supplier.